Recording in progress. Good evening, ladies. Good evening, gentlemen, and good evening, my dear shifters. Today is the 23rd of April 2026, and this is Paradigm Shift Premium Session. And actually, it's a special session because we have for the second time one of my favorite traders from Twitter, Landy. Hello, brother. Happy to have you here. How have you been since the last time we spoke?
Man, I've been great, and it's an honor to be back here with you, as you are one of my favorite traders on X, or Twitter, as it's well known. Look, man, it's been quite a ride in the markets since we last spoke.
Yeah,
Um, we touched on a lot of stuff the last time. I can't quite remember exactly, but I remember we were pretty well aligned with our outlook on the markets, and
we were.
we've seen things play out pretty much to what we were tracking. And
Correct.
it's and many attribute this to the news.
Hmm.
The way that I operate, I believe, and that is
Yeah,
that charts before news, the money
yep.
moves first, and then the news, you hear about it later, right?
Correct, correct.
So yeah, it's I've been trading a lot, and I've been introducing my audience more and more to where I, cut my teeth was in traditional markets as well. So crypto
Mhm.
markets and traditional markets, and getting my audience and as many people will listen to me on board with understanding the macroeconomic picture at a global scale and how it affects risk and how risk rotates and how money moves. So it's been a lot of fun, actually. I've been having a lot of fun.
I think the last time we spoke, we were aligned, and one of the things that I was mentioning to my guys was the fact that although I watch a lot of your streams and a lot of your YouTube videos when you post them, I have to say that in the last 1 month or so, I think I skipped. I've been like hands on deck on some things that I was building. I'm doing my best to also launch some products. So, since we are aligning, I'm very curious right now if this time we're also gonna be aligned because for a period of time, for example, I was bearish on equities um, until we recovered on some levels. For example, until we went back above 6,600 on S&P and above 25,500 on Nasdaq. Um, and now I'm back bullish on equities, obviously, since we were close to all-time high, and especially after we broke above all-time high. I also have some indicators that I'm following, which show no signs of stress. But I'm in the camp of still being neutral to bearish on Bitcoin, right? So I'm waiting for a rejection from 81 or from 85. So I'm curious before I, share my charts and share my views. This was just a quick catch up. And I'm very curious to see how do you see the market? How do you see TradFi? Or what are some of the, and of course, after that, how do you see Bitcoin, Ethereum? What are some of the charts that are catching your attention right now? I'm really curious. I'm also very excited for this. So I cannot wait to see. Whenever you want to share, you already have the option to share your charts and walk us through your framework.
Well, yeah, I'll share here shortly, but I gotta tell you, I am aligned with you on traditional markets in this case. I am bullish on traditional markets, especially with the way that we saw the V recovery go.
Yep.
Um, but it is the entire global indice and equity system, whether you're looking at American markets or not, is dependent on energy right now, right?
Correct.
That's going to be highly dependent on what's going on in oil markets. Despite many countries' initiatives regarding green energy, all of that still requires infrastructure build outs and requires, in this case, petroleum and natural gas and stuff like that. So we are subject to what occurs in the energy markets. And obviously, with the current situation going on in the Middle East, we've seen an entire supply chain readjustment, right?
Yeah.
So in this case, we now that we have the supply chain readjusting and reacting to what's going on, we are still in a period of drawdown across many nations worldwide. right, in terms
Yeah,
of reserves. And it takes time to catch up. So what I'm watching very closely is oil markets, obviously.
right.
Um, and for the US, not so much natural gas, but for outside of the US. So for foreign markets, I am watching natural gas very carefully as well, because
Okay,
this is going to apply stress to economies worldwide.
I agree.
Um, and Well, I think that the recovery was beautiful and the structure is going to end up being a bullish one. Outside of when you get a recovery like this, it's just this is not bearish, right, for equities.
Correct.
Um, that's now it's about w- when we see the correction, we're likely going to see a rise in energy costs, right? Whether that hits the
Yes.
oil, because we have a fractured oil market between WTI and Brent. um, the stressors might be a network effect from outside of the US economy to the US economy. We're likely going to see energy prices in Dixie strengthen to the upside while getting a correction. It's just a matter of when. For Bitcoin, I am bearish right now. I am not, I've not flipped bullish. I will not flip bullish in a structure like what we currently have. And you'll have to forgive me. I'm not sure actually how I can share a screen here, but I will once I figure
You
that
have
out.
you have the green button in the bottom of the bar where it says raise your hand and share. And after that,
Oh,
a
okay.
pop-up is gonna appear and you can share your screen safely.
Yeah. So when we yeah, I'm only getting raise your hand settings, and I'm not getting the share button here.
Wait a second, wait a second. So weird. I I thought I
There we go.
promoted. Yeah, now it should work.
I think I think I
Yeah,
might.
yeah. No, it's good. It's good. You can share now. For sure you can share now.
So one of the big things with Bitcoin is, I've and this is what bugs me about social media, and I'm sure it bugs you as well. But
Yeah.
the false equivalence stuff that I'm seeing in people that are putting out charts and comparing it to last year, same time, which was a downtrend on the weekly.
Yeah.
And this is, I've seen quite a few people, actually start to actually share this same chart over and over again, where they are um, drawing some sort of a correlation between. I think it's more based on the timing than anything else, and the biggest thing here is like just because last year we saw a drawdown in Q1 to Q2 that was building bullish divergence. This is not the same. Well, we were in lower high, lower low structure this year last time, um, and we're in higher low, higher high structure right now, which is a bearish pattern.
I think
We're
it's the
right up
vice
against
versa. We
resistance.
were in lower highs, lower lows, and now we were in higher highs, higher lows, and we are now in lower highs, lower lows.
Well, in this case, for the bottom structure, right?
Right,
So
right, right.
in the overall structure and like the
Okay,
macro for the
okay.
monthly,
Right.
I think my request go through for the share of the tab? It might have
You
to,
were
but
you were already sharing. You were already sharing. We were
oh, it's
seeing your
already
screen,
showing.
and now you
Okay,
have to reshare it again because you stopped it.
okay,
But we were seeing your screen already.
okay. All right, cool. So in this structure over here, while we were in the monthly, right, we were in a nice, beautiful uptrend. We were well away from the last, lower high and higher low structure, right? So we put in
Right.
the high. This was going to, inevitably draw down into some sort of a higher low. Whereas now we have a broken structure, of course. Just the basics, right? And one of the things that I keep getting questions about from a lot of people is like, well, how is this time different than last time? Well, the structure is different on the macro time frame. Also, we were in, once we broke, we put in a higher low, lower high, lower low, lower high, lower low, building that bullish divergence on the weekly time frame.
Hmm.
While we're in this downtrend here off the lows, we are not seeing the same look, right? We're seeing a higher low to higher high, which is it's a bearish pattern, right? as it stands right now. It doesn't mean it can't move up further, but much like you pointed out, for me, it's a little bit different in the way that I chart, because we've mean reverted back to a basis band for those that use Bollinger Bands. But right now we're between some really key areas, right? We've got 78 on the weekly close there. We've recovered the swings. We've recovered and reclaimed those highs. And now it's all about testing the two weeklies between 78 and 80. And then we have the possibility that we could go up and test the mid 80s, right? Which is
Yeah,
right around this high, 85 to 86, maybe even potentially where this lower high inflection point was up here between 86 and 89 if things really got spicy to the upside, right? But in this case, I'm not sold on this being anything more than a bearish retest of an area of support, primarily because of the move down initially off the highs that broke the weekly structure, but hadn't yet broken the monthly structure. We swept and started to close below the low side structure here and ran right into the top side structure on a closing basis between 86 and 89 and just kind of closed in there until we closed essentially right on it, got the close open rejection, and then moved to the next level and then right through the low side structure to really get rolling down in an expansive move after mean reversion. So there's a few different scenarios that I'm looking at here. Is like, okay, we can continue up, but it hasn't flipped bullish in my book yet. The entire setup is still a bearish setup until I see, you know, primarily the low side structure would need to hold on any moves back down, but we would need to see a compression again. So we would need to see, we get expansion, compression again. We had compression at the highs to expansion. This is still, this is mean reversion coming from expansion. I need to see a recompression that is bullish. And right now, this is not that structure for me. The only way that changes is if we not only reclaim the low side structure, the high side structure, but then we start to reclaim the get past all the lows of this structure, reclaim the highs, and then start to push and reclaim the lows. And I just don't see that happening, right? Like I don't see that happening from here. Um, right here, right now, I view this move up as a bearish retest of overhead resistance for Bitcoin. And thus, we see the same type of pattern across the crypto space for the majors, right? This same pattern is playing out off of the lows. A lot of people are calling it, macro low in because of the W bottom, and maybe we get some more upside price action even on the weekly, even if we do get corrections from, the initial overhead retest of the breakdown. That's where, it would just have to hold 65K, which of course is one of the first highs that was put in 2021. I'm just not seeing it as what I'm seeing as being pitched as consensus when it's not on social media, is that lows in, you missed it, ha ha ha, I was right kind of thing. Meanwhile, they're deleting all their calls that they got wrong. Um, and I'm viewing this as a bearish retest. Um, the only thing that would change my mind would be not just a structure change like what we're seeing here in terms of a structural shift, but a full on reclaim on the weekly um, of $98,000 after a compression. So if we like completely just absolutely ripped to the upside for Bitcoin in this case, and we went right there right now to 98, that would be bearish for me. It's an upper second standard deviation reversal period. Even if it closed up and over, it would still be a bearish move. And meaning that, yeah, you can long it right into it, but I'd be looking for a move back down to find support. And then I'd be, looking for higher low, equal low setups to then flip bullish if that did start to occur. And or I'd need to see a reclaim and a compression and still higher low structure remain intact. There's just a ton of overhead resistance. There's a lot of structure that needs to be reclaimed. The only other argument, and I have floated this before, is there is the possibility because of that we could begin to see that. Like, I'm not bullish yet. I'm not seeing what I want to see to become bullish. So I'm bearish neutral like yourself, looking for the area that we're already in, 78 to 80, and then mid to low 80s as the primary areas that Bitcoin is more likely to test. But even potentially up to 90K, as that is a 20 simple or a basis band on the monthly here. The only way that the only scenario in which I see this turning out bullish is reclaiming, some of the high side structure over here, pushing those weekly lows near the top. And then I'd start looking at this as more of a, hey, okay, macro low likely in. This was a deviation of the wider uptrend. So, broke the uptrend and then right back on to get re-expansion to the upside. And there you go. That was our bearish period. And, you know, that's for right now. For me personally on the daily, that's holding 73.5 for structural purposes, and above 70 to 72 gives us a good chance to continue up, testing the areas that things are currently in. Anywhere below the 70 to 72 levels, I'm starting to look back to the range that Bitcoin was just in down here in the tighter range. And then 65 becomes the important area to the downside on the weekly. So I'm curious, kind of where you're at. I'm not really breaking out into full on TA mode like I usually do, right? But I'm curious as to what you're seeing, because I have many of the same levels that I'm eyeing. Different methodology though.
This is what I mentioned to the guys, and I said it's gonna be very interesting because we didn't catch up for some time, and not even in the Wolf Spaces we were not able to sing. So I know that you didn't. Maybe you saw my work and you saw the
Yes,
levels, but you're gonna see them even like in a deeper dive right now. Before we move on to that, I have a question. If you can go back just to the bands, I have a question
sure.
regarding just the bands because I'm not using Bollinger Bands, but I'm really curious about something. How many times does the price on daily goes above the upper three standard deviation? Like, is
It's
it is
very
it a is it a common occurrence or is like some like once in a blue moon?
it's very uncommon.
Mhm.
It's typically you'll only see it closing. You can see it touching
No, I'm
the
saying
bands
above it,
in an
above
extreme.
it, above it.
Above it or below it, the only times that you're going to see above or below it is when you're coming from a compression into an expansion.
Hmm.
So, and even then, it's pretty rare. So, like, I'll give you an example from the prior range overhead. We went into a compression. We tested further up and we were pretty well governed by the top side. We got a small closure outside of it, mean
Yeah,
revert back to the basis, trend prevails. But we only got like one closure outside of it coming from a very tight compression and volatility.
right.
And then on the other side of that, we did expand the bands and then we started to close near them, and we didn't even close outside of them, right? In
Mhm.
terms of the lower third or the upper third. So it's
Right,
going to be very rare, but because on the daily, for instance, they're very reactive, you're going to get a different look than we might see on the weekly. So, for
right.
instance, we were compressed at the highs after the long form consolidation up here, and then we closed the so in my bands here, I've coded it so that it's easier to see the triangle, the red triangle there is an actual closure below, in this case, the lower third standard deviation. And
Hmm.
that's because we were coming from a compression. The initial expansion down closed below the lower second and third. And then we didn't even close the next candle outside of that, right?
Right.
So the triangle denotes the close below. And over here, compression to expansion, we had one green candle close above the upper third standard deviation. And then it's about tracking the expansive posture from there. Same here. So track the expansive posture from there. We hung out, went sideways, mean reverted back to the basis as the basis is coming down. And then we come down, test lower second and into the zone between the lower second, lower third. So technically, Where we spiked at 60K, it was the week prior's lower third standard deviation. When the
Mm-hmm.
week opened and then actually spiked it, it was already expanded down to, the $55,000 level or whatever it was.
Mm-hmm.
So it's very, very rare. And it's usually going to come, you're only going to see closures outside of the third standard deviations to either the upside or downside in a compression to expansion. So consolidation to volatility expansion.
Can I ask you something
Um,
here, please?
yeah,
By your rules and by the framework, cannot this be, sorry, let me redraw it. Cannot this be a compression, which can pull us to the,
this is mean reversion. This was a compression on lower term timeframes, right? So what we're seeing right here on the weekly, this is still volatility remains high, right? Until we get this higher low, and then we get volatility dumping out, right? So because we're mean reverting back to the basis,
Mhm.
so it's relative to the basis, right?
Right.
And then the longer period of time that we spend in this mean reversion between the lower first and upper first, bracketing the 20 simple moving average here, the tighter the bands will get, right? So this was a consolidation and a compression on lower term timeframes relative to the weekly, but it was still an expanded posture in terms of volatility on the weekly. So we haven't gone into the full compression phase. This is what I would term as a range phase, right? Where we are getting volatility compression within the bands denoted by low volatility, but we haven't gotten full on Bollinger Band compression. We're getting stabilization of volatility. We're getting mean reversion. And if we start to close back outside of the lower first, we'll see volatility pick up. And then we'll see that the lower second, for instance, would be the primary target. It's around 57 to 58, right? So I've got a zone of interest around mid 50s to upper 50s if we see 60K broken below, right?
Mhm.
And we wouldn't see true volatility expansion until we saw close below the lower second. And then we start targeting volatility expansion into the low side structure over here, being low 50s to the upper 40s and potentially more. That's where we get volatility re-expansion. While it's set up and because it's based on a close, right? So
Right.
because it's based on a close, we would have to see a close below, in this case, $57,000, right? So
A
closing
week,
below there on
a
the
week
weekly.
on the week. Okay.
Yeah. And that means that we could still come all the way down and hit the upper 40s on a swing. And then it's all about that phase. It becomes an expansion phase or a high volatility expansion phase, meaning that if we were going to start breaking away from the basis band here, we would see volatility increase within the context of the bands. And each level, when set up like this, especially when you're looking at this, it becomes conditional. So below 67, 68K, that would be an area that we'd be looking at as this is an area of support confluent with whatever areas on lower term timeframes are, prior supports. And then anywhere below there, we look at the conditions for the actual closes and closing zones as support areas. If lost, we're going to go test the lower second, 57, 58K. If closed below, we've now hit a new volatility expansion, opening up the lower third standard deviation and the rest of the structural, the rest of the bottom side structure here and possibly top side structure over here. Same for the upside because um, we are still seeing the bands trend down on the upper side of the bands here. This is all set up for rejections and it's conditional. So 86,000, meaning reclaim the weeklies overhead here. We could potentially see 89, right? But on closes here, that opens up the doors to go test, 97 to 98K, but very highly likely going to be a reversal zone between that upper second and upper third until we see a tighter compression or we see close over close price momentum, close over close price action on the weekly closing above the upper second standard deviation and more importantly, holding it. If lost, on any mean reversion back between the bands here bracketing the basis, because there is room on higher term timeframes. When looking at a daily, you could see that we went into a compression, right? So we had the big expansion down,
To the
right?
downside, yeah.
We mean reverted, and then we went into a compression, right? And we hit the bottom side of that compression, hit the top side of that compression, and then finally closed above the upper second standard deviation, and breaking slightly outside of the prior highs of this compressive range. We held the basis band region around the lower first and the upper first here in higher low fashion, and then continued to get a little bit of a higher volatility environment within an expanded band set. We haven't seen like a true big volatile expansion, because you can see the same thing occurred over here, right?
Mm-hmm.
That we're seeing now. We are getting a little bit more volatility expansion now that we are testing some of the bottom side structure over here. But we are not seeing, well, we haven't quite tested the 80K region, right?
Can I ask you
But
something?
yeah,
Because I think, sorry, I really don't want to interrupt you, but I really find
go
it
ahead.
fascinating because we don't have anybody here in our group who is watching Bollinger Bands. So
Yes,
yeah, I want to see a little bit more from this side because it's
sure.
very, yeah, if you can pull the chart a little bit to the left side.
So when looking here,
No.
uh,
Just on this one because I'm curious
yeah.
about some points that you have. So when will we get the red points? When we're gonna be between the second and the third standard deviation? When we're gonna be here?
Yeah,
So
so
these ones that we got on the before we had the leg down.
before we had the leg down, so you're talking about this structure here?
Yeah, I'm talking about this structure and when we're gonna get these dots, this pink or
Oh,
purple
okay.
dots, and when we're gonna get them
Yes.
here, when we're gonna hit the third band standard deviation.
So the purple dots, I'm glad you asked about that, because that's just a visual representation of closing. The triangles for my indicator, the red triangles are closes above or below the third standard deviation to the upside or downside. You'll see a red triangle. You rarely see them on the daily. You see some of them over here from last year. That's the third standard deviation. Purple dots are closes above the upper second and or below the lower second. So in traditional Bollinger Band theory or practice, I should say,
Mm-hmm.
um, the upper second and lower second standard deviations, this teal line, um, this this is going to be typically seen as reversal periods, unless you get close over close price action above it, but it leads to extremes in volatility and then reversals. So for instance, to the downside here, after the compression, we get an extreme in volatility upon the initial expansion, close below the lower seconds here, and then mean revert. And then again, in this case, because we never broke back above the lower first to mean revert, we got continuation and just rode it down. By the way, you can match up a 5-period EMA typically with a first standard deviation away from a 20. By the way,
Mm-hmm.
that's just kind of how this stuff works mathematically. So we were trending down and continued to hug the lower second and close below it, and then spike into that lower third until we finally got the reversal reclaimed, rejected upon retesting the lower first in this case, finally reclaimed it, and then mean reverted to the falling basis band or 20 simple, and then going into a compression. Now, what we saw here is we saw an attempted. Now, this is where I don't just rely on the bands; they are just a measure of volatility to inform me about conditions. So in this case, my conditions after we bottomed out here and went into this compression, people were getting excited. Volatility expansion on this candle. We see the close below the lower second standard deviation, but the conditions were we have to lose this low here to test this low to get expansion further, right?
Right.
So just closing below and increasing volatility doesn't do anything. So support and resistance, trend, all of those things matter and are conditions. So in this case, to the upside on this move here, of course, we have the overhead resistances that were being tested. In this case, $98,000, which was the low side structure over here, high side structure this area over here, all kinds of different stuff, right? So there's all kinds
Right.
of different reasons for why we were getting expansion. In this case, we didn't get any closes above, which the condition to go and test 98 was a close above, these highs here. They were initially put in, right? And then we got the expansion over here, but we didn't close above the highs at 90, 94 and a half, 94.7. We didn't get that close, but we mean reverted and then started to get the close above it. Same candle that went and tested on the expanded Bollinger Band set by the upper third, which was already lined up with overhead resistance at $98,000. So we'll see those purple dots print when we get the closures above or below the second standard deviation away from the 20 simple or basis band. Same to the downside. So here's for the daily. So we had the lows, the low side structure, right? So you have these, the area is essentially at like 83, 8, 84, 85K, depending on which charts you're tracking, right? So I picked the swings mainly as this zone between 83.8 and 84.4. What you see here is we start to come all the way back down. So we run the bands. We do what's called running the bands. We come from one high, we come down, we break the uptrending structure, and we slam right into an area of support where the lower second standard deviation is lining up. So now the condition becomes we need to see closes below the lower second or around the lower second that are also breaking down from this low point by point. So we have this low right here, right? So we got this guy right. If I can actually get this mouse to line up, this low right here at 86,350, right in a weekly support zone at 86K. We have we slam right into that and the lower second, right? We get a
Right.
nice little bounce, mean reversion, and then it's about the next conditions met. If we're going to hug below, if we're going to hug the lower side bands, in this case below the basis band, in order to continue this larger expansive posture of the bands, we now need to close below, the 83.8 realistically. And we see that we got the swing into it, we got another swing into it, and then below it. And that opened up tick by tick, day by day. This opened up the actual low. So I'm looking at that as going, as long as we are trending below and we are in a bearish structure and we continue to break down in lower term timeframes below the low $83,000 region, we are more likely going to get that expansion to the lows and potentially through the lows for a much larger expansion. And you can see that we got close each time, and then we finally broke and closed below it. That's full expansion. That then also increased volatility to the next already expanded levels on the weekly. So if we go back in time and we take a vertical, what I was tracking in real time was or we take let's take a vertical and go to that weekly that bounced at 60K. So if we go to the weekly here and we look at what some of the areas of interest were as this structure was breaking down, like we got the rejection. So there was the rejection, right? The next week we're hitting the bottom side of the range. It's trying to hold up. So then it's about where's the lower second on the weekly. Well, the lower second during this week's candle becomes the defining condition for the next week. And it was at 76,500 or so. And that's where we saw the next week's low come in. And that was all conditional on the daily based on breaking down below the daily structure, continuing that expansion to the lows and then through the lows. Mid 70s, 76 to 78 is where I was looking at the time. We did stall out there, and then we get the close open, we get the bounce, and then we're tracking not just that lower second, but also the lower third, right? Lower third for that weekly on this week's candle was at the $63,000 level. Next week, when we finally got the breakthrough below, where was the lower third standard deviation? Right around 60K. It was between 58 and 60K. So it had confluence, of course, with support and resistance zones of interest over here on the weekly structure. And it's all about confluence with me, and it's all about setting conditions where the bands match up with support and resistance, and relative to, are we in a compression phase or an expansion phase? Because we were in a compression phase on the daily, well, in an expansion phase on the weekly. So what the defining factors are, if we get expansion on the daily to the downside, we can look to moving from that expansion on the daily from compression to expansion into the already expanded areas of interest for the Bollinger Band set on the weekly that have confluence for major areas in the auction, right? And that's where I kind of have really cut my teeth in terms of how I measure volatility. It's all about confluence. It's not just about the band set, but it's all about confluences where things line up. And if we are meeting the conditions to get that volatility expansion. For this case, we're still expanded or fairly well wide set on the Bollinger Band set, which tells me this is bearish until I see a compression and I see continued higher low structure on the weekly time frame. So for right now, it's all bearish retests. And for the weekly, I'm watching 65 on any corrections to the downside for the weekly. Daily obviously has different conditions that I'll track along the way.
um, I wanna do this, like hats off. I think this was like a workshop or a masterclass in Bollinger Bands. I have to say that I did not study them. I of course I know about John, and I know about their creator. I saw other people working, and I have to say, from all the people and from all creators that I watched, you are the one that I can listen to. Like, for example, I think you're speaking now for about half an hour, and you're explaining this whole setup, and I could have listened to you for another half an hour and 45 minutes with no problem. Just the way you flow through it, it makes so much sense, and it's like so easy to follow through because it makes a lot of logic when you explain it. Although at first glance it might be a heavy indicator because it might be heavy for the eyes, right? Like it's full, it's
Yes.
not just like, like two MAs or something like that. But in the same time, maybe it also it appeals to me because it's very similar to shit. Oh my God, what you have there. Jesus
I've
Christ.
got I've got what I like to do. Here's what I really like to illustrate is Bollinger Bands will often when moving from expansion to contraction for Bollinger Bands. Remember, it's I look at the markets from a very base level view, because all trading systems, no matter which trading system you look at,
Right.
if it's a good trading system, is built on trend, support and resistance, volatility, and momentum at its very core. Obviously, all the bells and whistles that come along with that, patterns and whatever methodologies. That's why there's so many different systems, right? And there's no like one system to rule them all, because they're
Correct.
based on an auction, right? And in that four part, I equally weight trend, support, resist. Obviously, trend creates support and resistance, which then leads to volatility, and this all creates momentum. And what you'll find is you will find confluences everywhere with volatility. And that's usually the piece that people leave out because it's baked into a system. We don't think about it, right? If you're using Elliott Wave or GAN, a lot of that is already baked in or implied. It's like the volatility is already there in terms of your measurements. So we're not necessarily paying attention to it. But I think in the way that I approach it, because I'm a volatility trader, I trade the volatility in markets. I like to match confluences, and you'll find that you'll get confluences like upper second is where the 50 simple is on the weekly. 55 EMA is where the upper first is. You can find other matching levels for the lower first, like the 200 period, right around the lower first standard deviation. At one point, we had the lower first and 200 directly in line back here, right? They were directly in line with each other. Yeah, we fell through, but for volatility purposes, it's about the closes, not necessarily. We can define how far this is going to stretch out. Well, the week prior's Bollinger Band lower third was right there. That becomes the condition for the next week. Um, And in this case, we had for a long time, we had the 200 SMA and the lower second lined up. Now that they are diverging, this becomes a zone because it's a volatility zone of interest around 67, and the 200 EMA obviously is an area of interest for the weekly. Same for the 200 SMA. That becomes an area of interest. It's also right at the low, essentially at 60K. Now we have a zone where I say, okay, 200 SMA and the lower second becomes a viable zone. If we start to break towards it, again, that zone would expand because the SMA is going to take longer to move, right? It becomes a consistent area of interest. And then the lower second begins to expand again if we start to hit it. Right.
Correct.
And then it's about support and resistance and all that kind of stuff. Like this right here, I could tell you if we rallied even to $98,000, every bull on social media is going to be, just trying to razz everybody, telling everybody they missed it. Right. Meanwhile, it would be right into resistance. Right. And that would, you didn't miss anything, honestly, because if it rallied right into resistance, even if it deviated and closed above and hit in the low $100,000 region, this thing's going to come back down. It's going to mean revert. And then there's your opportunity. Right. So I just don't, I look at things in a very different way, mainly because in in traditional markets, when trading volatility, you're trading options. So I have to figure out where it is that I want to position well ahead of time before the market already prices it in.
Hmm.
So that's one of the reasons why I use Bollinger Bands. And it doesn't always sync up, but I mean, one of the things that I like to show people is like we've got the upper third standard deviation and 200 EMA right there converging at a monthly level. By the way, the monthly close open at 82 and a half, right?
Right.
82 and a half is, a big level, 82 and a half to 83. And then there's weeklies right there, 85, 86. So, and we've got the 200, the 200 simple right there, also crossed below a 377 EMA. You don't have to have the same EMAs. You can change whatever you want, right?
Can I ask you
And this is,
something now? Because I'm
yeah,
not
go ahead.
sorry. Because I know that you use a lot of MAs and EMAs. Why
Yeah.
EMA and not the SMA, like not the simple one? Why the EMA?
I use a combination. So,
Right.
and the reason why is because of the way that they're calculated. We can get some bias breakers. In particular, I prefer, um, I prefer to use like I'll tell you the EMA set that I like to use is actually one that the caretaker has put together because it's pretty well back tested for this stuff. I'm not sure if you're familiar with the caretaker. He's created a lot
No.
of indicators. Really, really cool guy. He used to work with Eric Crown,
Okay.
and this is where one of the interesting things is this creates a giant mess here. I said the 5 EMA typically tracks the first standard deviations. You'll see it line up, especially in trend. 5 EMA upper first. Why do I use EMAs, not SMAs? Well, I use a combination. So let me get rid of the Bollinger Band set here. And we can see that I have a 5, a 21, a basis band is a 20 simple, typically is on the chart when the Bollinger Band set is there. Because when EMAs cross over or under SMAs, we can get a nice bias. And let me roll back to this here. So there's some good examples. When we were, let's do the weekly. Weekly is going to be a little bit cleaner for this. All right. So when we had the EMA leading, for instance, we were let's go to actually index here. That would be even better. Let's get this out of the way here. Is this, and this is not index. Where do I have index at? Let's go here. So for the index, and we can remove drawings because I don't really care about the drawings on this one. All right. So coming off of the bear market lows back in 22, we rallied into the 200s where they were crossing. So the 200 EMA and SMA, right? And I'll just use the EMA and SMA as an example. So in my indicator here, I'll just turn off all of these other ones, except for those two. Give me a second here because I am on a different setup because I'm traveling. So forgive me.
No, 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 don't
But
worry. Take your time.
so for the 200s here, we rallied right into the where they were crossing, right? And of course, rejected. Came down, found support on the consolidation structure over here, and then we rallied above. And now many were just expecting this to absolutely just keep cooking to the upside, not just hit, because everybody was ignoring for some reason the overhead resistance here in the monthlies, but everybody was looking like it's going to go to like 40,000, right? I saw some analysts at the time, even that I respected, were like, "This is going to go to 40,000." I'm like, "No, it's not. It's going to mean revert right back to the 200s." And why was I thinking that? Well, because we had the exponential get under the 200, and we need to see this area retested, which is also a retest of the breakout from the lows, right? The highs over here, the highs over here, and we retested it twice. We even got trapped under the 200 SMA. And what I like to do is look at the crossovers. So we rallied out, and then we went up, and everybody's like, "Yep, we're gonna hit this high." We reclaimed that. We had the rally into the ETF launches, then the spike into the monthly at 38.5, and then the nice rally to new highs before the halving. And now everybody was, essentially looking for things to absolutely start cooking to the upside. And it takes a long time for the 200 to get back over, which is and this is going to be where I will give bulls a little bit of a tip of the hat if this ends up being a longer term time frame deviation of trend on the monthly, lower
Mhm.
low to a higher high.
Yeah.
Because we had, during the bull market, it took a very, very long time for the 200 period to cross back over the 200 simple, because it's more reactive in the way that it's calculated. And of course, we get the long consolidations, long consolidation top, and then right back to the 200s here. Now, the only way that I'd be looking for this to go significantly lower than 60K, not just sweep, but go significantly lower for a longer period of time, would be to drop down through the 200s and get the 200 exponential under the 200 SMA. That would be an absolutely brutal bear market, which tells me if we don't see that, and we see these areas just swung below or they hold like they are currently, then we're in for a less severe bear market than in previous cycles. Not looking to some of the extremes that some are at the 30,000 and so on and so forth, unless we start to actually break below on the weeklies and then fail to get back above and recover. Then I'd be looking for those extreme downside conditions, because we would be getting expansion on a monthly to the downside. We'd be breaking below the 200s with significance on a weekly. We would also then likely see the 200 EMA then flip under the 200 SMA as it's rising, and and the price action on the weekly reacts to the 200s. In this case, the EMA reacting much faster. So any kind of sustained weekly closes below the 200 simple would do that for the 200 EMA, and likely result in rejections on the 200s as they cross again. And then very highly likely, because of the expansive structure and look on the monthly in terms of where we could potentially go, that's where I'd be looking for very significant low side price action. But we're not there yet. This is actually the compression and the weekly is a bullish setup inside of a bearish mean reversion. So we need to see a lot more work done, which means I think there's going to be more time to accumulate um, throughout the rest of this year into late this year, and then come back to it later. It's a little bit esoteric, in terms of a lot of people don't like to use a combination of EMAs, but I'll show you like 50 and 55. This is the same kind of thing, right? We had the 55 riding high, above. We had the 55 was getting above over here. We crossed over. Once we got below the two, they shift direction. It's like the what do they call them? Rainbow bands, where it's just a cluster of EMAs all stacked on each other, and you can
I
see when
think
they're
they're
positioned
like
when they're not.
they make clouds or something.
Yes, like a cloud or a rainbow band or whatever fancy indicators that people like to use. It's a version of that just with key moving averages. And I like to keep track of them. There's nothing set in stone when it comes to moving averages, but they are a good metric for seeing if things are more likely to line up with your areas of confluence for, support and resistance, and then the significance of falling through or recovering above them. So I mean, it's significant that we recovered above the 200 exponential right into overhead resistance into a cluster of MAs and EMAs, which naturally going to track price action right to those zones given the time that we've spent down here. When do we flip bullish? Like, for me, not anytime soon. Sorry to sound like a bear.
No, it doesn't sound like a bear,
Thank
actually.
you, though.
I just wanted to see because I remember a period of time when just a brief period of time in the last bull run, our views on the market diverged, but not that much. I mean, we were not 100% aligned, for example, like we are now. So I think you're
Mhm.
absolutely cooked here. And let me share with you what I see in the market, and you'll see how similar our views are.
For sure, yeah.
If you can stop the share screen,
Yep.
I will gladly show you what I see. So for me, and I think like I said, it's interesting to see that we have extremely different approaches to the market. I do not ever use Bollinger Bands. You do not use Ichimoku, or um, you also use support and resistances, but the way we look at
Yep.
the markets are totally different, but we align. So for me, why I have this curiosity, and I also want to ask you, um, why do you think that people dismiss like very simple price action? Because for me, for a lot of period of time, this was just a higher high and higher low. Sorry, lower high and lower low. Like we printed the high, we dropped, we finally had the low, first bounce,
Mhm.
we have the lower high,
Yeah.
expansion to the downside, lower low. And for me, just in this moment in time, right, where we find ourselves now, like if in the bull, and this is the question that I ask, and I'm surprised because I see also like traders with a lot of experience. Did we have corrections in a bull run? Because this was a freaking bull run, right? So did we have
Yep.
corrections before we had expansions?
Yep.
Absolutely, we had. So why are people surprised when we have bounces, like when we have relief rallies in a downtrend? This is what bugs my mind. Like, how can you be such an experienced trader and you cannot recognize the nature of the market on the higher time frame? And this is one. And second, like we have the high, we have the low, we have the lower high, and we have the lower low. We didn't re First of all, we did not reclaim this area because for me, above 85,000, once we're going to reclaim this area from here, so the lows that we had, the first
Yep.
low of this bear market, for me, and I said it also publicly, listen, guys, I'm bearish, but if we reclaim and we go above 85,000, especially if we do something like this and we start creating some higher lows under, like above the previous highs from here, above 74, 76, for me, this is going to be significant. So if we're going to go inside this area, which for me is around between 85 to 94, in this area, and I said it also to my guys for a lot of time, I say, so 94, here I'm going to be neutral.
Mhm.
I'm not going to be bearish. I'm not going to be bullish anymore. I just want to see what type of price action we will have, right? So neutral between 84, 85 until 94, 96, because this is where I have the last cluster of the lower high. Depending on what price action we have here, although I doubt, for me, this is secondary because for me, topping patterns and topping of the markets, as well as bottoms, are not just a price component, are also like a time component. And
Mhm.
after like a 30 months of a bull run, because for me the bull run started somewhere around here when we broke above 20 and reclaimed this area. This is where I first bought Bitcoin, and like on all this move until somewhere around here until 98, I never mentioned bear market. So imagine on
Yes.
all this run I was just bullish, bullish, bullish because the structure didn't broke on weekly. Here I said, listen, this is where the bear market started. So for me it's going to be very peculiar. And listen, I'm flexible, I'm fluid, I'm elastic in the approach. But after a 30 something months of a bull run, to have a bear market which lasts, I don't know where we started the bear market.
Yeah, like right. It's not been that long. It's been a
Like
couple of months. Yeah.
really, because a lot of people, when I said that this is a bear market under 100, like around 98, they threw shit at me. I said, okay, when
Uh-huh.
is your bear market started? And they said under 74. So for them, the bear market started here under 74. So you mean that this was your bear market, right? This is my question for them. This was your bear market. After 30 months of a bull run, this is the bear market. Now, coming back, for me, the structure changes only here. So if we have some sort of like this kind of price action and we break above this area in order to invalidate this structure from here, which is lower highs and lower lows for
Mhm.
now, only above that structure, if we stay above it weekly and we continue to attack the next highs, which are around the lows from here, so around 106, maybe 108, only
Yep.
then I'll flip bullish. So like a break towards 100 to 102, stay above this area 94, 96 for like 1, 2 weeks. And after that, blast and print some new highs. So we can leave and finally print. For me, that will be the first high. This will be the
Yes.
first high. Like the
Yes.
first high, which will invalidate the previous lower high, lower low structure on weekly. It's it's weird because some, and I would say experienced traders that I really respect, they called that this is the first high. Like, how can, like, where is your, how can this be a new count? What am I missing, Landy? Tell me.
Uh, so if you go to the weekly, I'll tell you exactly why they're saying this and why they're incorrect in being bullish, in my opinion. um, so if you go to the weekly, it's because the reference is for them the lows, not the lower highs. So the low that was just set off of 65K.
You can draw, by the way, sorry to interrupt. You can draw on my screen. You see, like here, you see like a
Oh, I can.
like
Yeah. All
you
right.
see like a marker, and you can draw on my screen, and with Control Z after that, you can delete what you wrote. What you
Okay. So their reference is um, this area here. Oh, this is going to be terrible drawing. Um, so their reference is 60K,
okay,
and then they're looking at this higher low,
okay.
and then they're looking at this as a closing lower high. So this is going to be their it's not an arrow. It's
Yeah,
so
no, no.
tiny on my
So
screen.
that's the new
But
high.
this would be their new high. So
But
when
it's internal new high, right? Like it was this one.
exactly,
Sorry,
it's
sorry.
an up. Yes,
So like
it's
it
an
was also
uptrend.
this one, right?
Yes. So, like for me, the way that I've been explaining this to people is yes, we have a lower high, lower we have the lower high that was just, swung above. If we see a close above it, great. We've got higher low and low and a higher high. So the reference point then becomes, can it break the wider trend, which is $98,000? Just like what you're saying, because it's an internal trend shift. It doesn't mean much, right? And in fact, it doesn't even meet the criteria of printing bullish divergences relative to this structure that it's forming. So for me, this is not it, right? This is not a bullish pattern until we see something like what you just talked about. And what their contention is no, you missed the first higher low, and now we have higher highs. So clearly, to them in their book, clearly 60K is now a macro low. And in my book, it is clearly not a macro low. It is now a major low, and it's a conditional major low within a wider downtrend on the weekly structure. Just because we're getting higher lows and higher highs within this wider downtrend means nothing more than mean reversion to go and test overhead resistances, where we actually see that structural break would be to see this trend continue and then break above $98,000. Literally exactly what you pointed out is exactly my view on the market. And my contention is, though, even if we were to break above $98,000, we would still need to see mean reversion to another higher low. Like if we did it locally and continued to push the highs, like yeah, we're probably going to get those higher lows regardless, right? So if we
Right.
did consolidate above 98 and then push on to the low hundreds, you know, we're very highly likely at that point going to see higher low structure continue, even if we get some internal structural changes on the weekly, because in the macro picture, we've recovered higher term time frame overhead resistance, and we've broken the actual bearish change, right? Because 98K was the bull to bear inflection point. So recovering above there is a major, major deal on a closing basis, especially, right? But I'm looking at it as we could absolutely, there's nothing saying that if we get through, you know, if we push through the low $80,000 period, there's nothing saying that we can't test that entire structure all the way up to $98,000, right? But my contention is the setup is that if we did, it would be first pass rejections and like major rejections. And then we really have to pay attention to, do we actually get higher low structure that continues to get that break and close above and hold as support, right? So I think that your viewpoint of even breaking into the mid to low 80s, and even up to, you know, the 90,000 or $89,000 level doesn't do much, right? It's kind of, you're neutral at that point, because we could get a swing of 98, and it still turn out very bearish. And my band setup, the 55, I'm sorry, the 50 EMA or SMA being right there as resistance, that's all lining up. So, and that's all conditional based on even recovering like 78 to 80. So I think that their contention, what they're saying technically isn't wrong. It is a structural change, but I think that you said it perfectly. It's an internal structural change, and they don't define that for themselves or the audience. And I think that it's more hopium than reality. And they'd be, because what particularly bothers me in social media is that many will make declarative statements like, you missed it, 60K was the low, I told you so, kind of
Hmm.
attitude, right?
Yeah.
And there's nothing saying right now that 60K is more than a major low. It's definitely not a macro low. There's no structure solidifying as a macro low right now. If we see a monthly close, that sets the low, you're going to hear more of that, right? Um, and what I would consider what they're saying is they're front running. They're front running something that is not actually yet occurred, which is an actual structural shift in the markets, um, in the higher term timeframes. A weekly is not the highest term time frame. It is a metric that fits into the higher term timeframes. Um, so I would say that your view of the market is the correct one. I would argue that theirs is technically correct, but not. But the thesis is missing key pieces.
I want to ask you something here, because you said that this is a structure change, right?
On the weekly, it would be an internal trend change, right? Higher highs,
Wasn't
yeah,
this the same?
exactly. Well, on the weekly, no, because
We didn't have the weekly close there, right?
we had
It
a
was just
lower
a
low,
rejection. Yeah,
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 because
yeah.
it
It
was
was
the
it
lower
was
high, yeah.
different. So basically, this is my framework now. I mean, waiting game. I want to see if we reject from here, and if we get back under 76, I might start a shorting position and adding under 74. If not, if we go above 8, there is a huge supply here. There's a huge supply level here
Yeah.
between 78 and 81. Even Glassnode noted that that's the true market mean right now, where there are a lot of
Short
changing hands and a lot of OG holders are selling. But let's say even if we
short-term
get
cross-holder basis. Yeah.
exactly. So even if we get a little bit higher, I want to see what type of reaction we get from here. And from there, if we grab some liquidity, reject, etc. Once we're gonna get back under 80, I'm gonna short it and I'm gonna add to under like it's gonna be a starting position. Like usually I trade 0.5 out of my account per position, but here is gonna be 0.2, 0.15, and I'm gonna add
Mhm.
another one under 0.7 under 78 and another under 76. So I'm gonna have a full position with the medium price around 78 and maybe a stop loss around 82.
Brother, you literally just described exactly what my setup is. That's wild. That's wild. Now, granted, I'm trading some lower term timeframes, but in terms of like a swing trade, I haven't
Yeah.
really started a swing trade yet.
Yeah, but this is how I want to execute that one. And now, because you've been so kind and you showed us all your maybe like a big part of your secrets on the Bollinger Bands, I also want to show you on Ichimoku. It looks very interesting, and it looks like on the lower time frame. I'll give them credit. This looks like a bottoming sequence, but this looks like a local bottom. So what we can see right now, we can see that on daily we almost have not almost, we have 3 out of 4 confirmations for a trend change. We don't have the fourth one. So
Yep.
when we're gonna have this is called this is called Chiku span or the lagging span. Once this is gonna get above, or if it's gonna get above the Kumo, the red cloud, we're gonna have 4 out of 4 bullish confirmations on the daily, which is good. This is why I'm also waiting. And I said, listen, above 76 does not make any more sense to be bearish. Let's just wait for the price to see what is gonna print. But on weekly, we are so deep inside the bear market, people don't even recognize it. And this indicator I have been using since, so it's 2026, getting to 10 years now. Yes, so I think around 2016, I started to dabble into it. And this is what it shows. When we had this print, so we were around 113, I said, listen, it's going to be around the first time when we're seeing something like this. And when we entered inside the Kumo, plus we had the second bearish intersection between
Mhm.
the Chiku span and the Kijun Sen, which is the blue one. I said, I have a lot of confirmations that from my own indicator that I use predominantly, we're going into a bear market. Right now, for the first time, let me take the other chart, which is just the dollar. We are like, it's so clear for me, and like it's so clean for me that we are somewhere around this area. I don't know where, like somewhere around this
Yep.
area after we have this bounce. And there is an element, and you need to study a lot Ichimoku. Kijun, whenever the price is deviating to one side, like when we have the expansion towards one of the directions, and the price fails to make new lows on the downside or new highs on the upside, like we have here, after a big
Mhm.
expansion, Kijun, which is the blue line here, or the baseline here, starts going flat. And whenever it starts to turn flat, it acts like a price magnet. And right now, Kijun sits around, not around, this is the actual value, 88.137, so 88,137. What can happen, because this it still looks flat, if we continue on this, we might go to Kijun, meet it, and after that reject it. What's going to happen
Mhm.
from there? I have no idea. If we're going to make a new low, so we're going to take out the lows from here, and after that start printing the market bottom before we take it out somewhere in, I don't know, Q1 2027 or Q4 2026, I have no idea. Or or there is another probability if we're going to print a higher low, which is going to be higher than the cluster from here, and this is where we're going to start holding and printing the bottom and going out from the Kumo and reversing, basically printing the 4 out of 4 confirmations, or at least 3 out of 4, having some bullish confirmations, like bullish crossovers, like we had here, bearish crossovers. But for now,
Yep.
we are very far from the Kumo. So the cloud, Kumo, it's cloud in Japanese.
Yep.
We are very far from the Kumo. And I'm telling you, I think I studied more than, I don't know, 30,000, 40,000 charts. I have no idea, like in the tens of thousands on weekly. And I don't think I don't know if I ever seen a chart on weekly when it is like in this angle and the slope and the price is so far from the Kumo going parabolic like this. It does not happen. It does
No.
not happen. So where we are right now, if I'm gonna add my it's very similar to the Bollinger Bands, like the 3 standard deviation on the weekly, like
Mm-hmm.
uh, it's gonna be like a weird event if it ever is gonna happen. So where we are now, that's why I have my level from 94 to 96. Actually, it's around 98. We need to do something like this and get it out from here. If we go above that, hands down, okay, fair enough. Here I'm neutral. Here I'm gonna flip bullish, and that's it. Because since 2020, when I was trading live the markets, when I saw oil WTI with delivery for I think April or May going under like minus 35,
Yeah.
I said I'm never gonna say never in the markets. Everything can fucking happen. We saw what happened with
Yes.
silver. We saw what happened with gold, etc. Right? So okay, I believe in I believe in Ichimoku, but I believe more in price. So I'm not gonna be so stubborn. And if I see it back above 94 and we print some higher lows and we have some nice structures here, like from here, let's say we push to 88. After that, we reject and we start doing something like this. Of course, I'm not going to be so stupid to go against the price. Price no better than me and my biases. But for now, or for something like that to happen, it has to be like a very extraordinary event in the market, which I don't see it.
I am right there with you. I am right there with you. And that's fantastic because there's so much that lines up with what you were just pointing out with the way that I see the markets in general. That this is, for those that are listening here, man, what a treat because you got somebody that knows how this stuff works and is actually going to tell you the truth about how it works and not trying to farm engagement is what we typically see online because man, I, I'm I've been doing this for a very long time, and you're one of the most impressive minds in the game. So I really do think, and it's not just because we're coming up with the same conclusion, uh, but it's also because you can explain it very clearly. And one of the things that I would note on Ichimoku is, if we break above the cloud, even closing above 98, coming back into the cloud on the downside to fill it out and test it out would be, in my opinion, that would be the bullish. That would be the bullish move back down, even if it broke above and held 98. I wouldn't necessarily be looking for a continuation right away because if it happened too quickly, volatility doesn't have a chance to reset, right? Um, and I would want to see it come back down into and fill out the cloud as it compressed, right? So much like what we saw in 22 into
Correct.
23. So one of the things and my reason for saying this is um, there's a lot of people that are like stressing this urgency and pushing for FOMO, and it's just not warranted. You can literally sit back and pick your spot, pick your play. All you got to do is pay attention. Like and you didn't miss anything because price appreciation in that kind of a scenario where let's say it did break aggressively above and then come back down in a shorter period of time in some sort of a, let's say, let's say the market there's more reserves than been reported. Onshore oil is managing to stay steady and supplied well for getting on these boats. We catch up with that logistics lag time for the weeks of travel for boats that are coming to the US to fill up, and everything just ends up in this perfect world scenario where all of a sudden oil stabilizes and begins to actually trend down aggressively towards its supports that it rose from aggressively. The mid to low 60s, right? Even in that perfect world, that's where we could see the irrational moves to the upside, like what you said. Like it's very rare to see irrational moves like that, but they tend to normalize pretty quickly after for a period of time. So that's where the opportunity would present itself. I'm intensely bearish. I want to see the consolidation that I actually am looking for a leg down lower. That's where I'm at right now as it currently stands, unless we see $98,000 broken above and reclaimed on a weekly, even if it comes back down. But if it reclaims it on a weekly and then comes back down to dip in for liquidity, that's where, I'm looking, right? I think you drew out a version of a scenario that I was smiling at when I was because it's literally what my thesis is for this. Although my first thesis right now is that we see at least one leg lower, even if it is for a sweep, right, into the
So
mid 50s.
this is the model that I have been working, and I posted this model before we broke down, and I was just watching the cyclicality and how I mean, before watching this model and before starting working on this model, which took me like 1 week to prepare and align everything, it's just look how correct it aligns mathematically, like all the tops,
Yep.
like going back since 2017. It's gonna be extremely weird if we're gonna have the same type of scenario now. But I just wanted like the prices, like the bear market, the previous bear market, how much it lasted before we
Yep.
printed the actually bottom. It means that the actual bottom is gonna be somewhere in October, mid-October, so another leg lower before we print the actual bottom. And when we're gonna flip the reversal, when we're gonna actually be bullish, like we were bullish here. Obviously, I didn't wait until here. My buy was here with the guys when we flipped the structure. But when the
Yep.
Kumo flipped bullish, and it was even if you didn't buy anything here, like let's say you didn't buy anything here, and you waited for the full confirmation from Ichimoku. Now I can add it. If you waited for the full confirmation from Ichimoku, you would have bought at 25,000, and you
Yeah.
could have you could have
Beautiful.
rode it up until 100,000, and it's still like the top asset, the lowest volatility, etc. You would have made a killing, right?
Oh yeah. Yeah.
So now,
Brilliant.
let's say we go to 80 something. We have the leg lower, taking out, not taking out. I have no idea, but I think it's still gonna take like we have, in my opinion, if the cycles are gonna play out like this and like they play out in the past, we have to have the time component before we start having the bullish crossovers here, like we had. So somewhere around this area, and before we're gonna go out somewhere in, I know it's a lot of time, it's like still 1 year and a half, but I pinned my model. I'm gonna leave it there until it's gonna be invalidated or validated. I'm not, my mama didn't raise no bitch. So if I'm gonna be wrong, I've been wrong before. I'm gonna say that I'm wrong. If not, I'm just gonna leave it there until it's gonna play. But if it's gonna play out, believe me, this is gonna get a lot of a lot of traction on Twitter and on the financial
Yes.
platforms.
Well, here's the thing. I am pretty much in alignment with what you're showing here is based on my estimations and forward looking for Bollinger Band compression and expansion cyclicality. Um, I'm of the opinion that we don't get a compression until summer, and then we'll start to resolve that compression towards the end of summer.
Mhm,
So, no matter what the structure ends up looking like, I'd be looking for a macro low to start forming sometime end of Q3 into Q4,
mhm.
or like you mentioned, Q4 into Q1 is where I'd be looking in that time frame. Now, granted, that's a long time. We're basically talking about a year of a end of Q3 all the way till essentially end of Q1 of the next year. You're looking at basically 6 months to 9 months, but I'd be looking for the structural macro low to actually start to be in or being formed somewhere around that end of Q3 into early Q4 timeframe for my Bollinger Band set within a margin of error. And very, very similar to what you have here in terms of tracking the cyclicality of the bull to bear cycles. And this is where um, the argument by the 4-year cycle is dead people on social media has really gotten lost on me, because not only are we in a bear market now, they are in denial that this is a bear market. And the even if we were to just straight up do a V recovery, it's a we do the unthinkable from this, and we have that outlier event where we close above 98, we push towards the highs and make a new all-time high. It was still a bear market. It was just a shorter one with less volatility to the downside, which would be in line with um, a maturing asset on a longer time frame that is going into a compressive phase. The thing is even if we were to even if let's say we were to create a deviation and go make a new all-time high, I think that that's bull bait. I would not be looking for sustained runs. I would be looking for, we're probably going to run the highs, reject, come back down and consolidate for much longer. And in
You know
fact, I
what?
think that that would be the
You know
most
what I'm
painful thing.
you know what I'm praying here, and I just want to add this. I'm praying here that they are right. I'm praying that they are right. I'm praying that I'm wrong, so we can run the highs, so I can sell the remaining of my altcoins, and maybe I can sell even like that's gonna be the only event if we have that weird type of price action. Like, look how parabolic this has to run.
Yep.
I think that 90 some plus, maybe even more, like 95% of CT, like crypto Twitter, they don't even open the weekly chart. Like, how weird this move has to be and how parabolic it has to be. So it invalidates the 4-year cycle. Because even if you go something like this and after that you drop and
Yep.
you still go to the Q3, Q4 of this year, which basically is the bear market, right? Because you're going to
Yep.
print here the higher low, and this is where there's going to be your accumulation. It still is going to confirm the 4-year cycle because this is going to
Yep.
be the bear market. Even look, you're going to have 378 days of a bear market, lower highs, lower lows. So even if we do that, but if we do not do that and we just go straight up like this, which it's
That's a seller. That's a seller's rally right there, brother.
I would say that's gonna be the only time when I'm gonna sell my bit, like a huge chunk of my Bitcoin before this plays out. So before
Yes.
we're gonna run, I'm gonna say it here. I'm gonna put it on Twitter. If we do something like this, the moment that we go above 96, 98, and we start, going maybe above 100 and on some, I will look into to sell like a big chunk of my Bitcoin.
Yeah. I although I'm a bit different in that regard because I'm so heavily involved in mining. And I've done okay over the years. I would not be selling my Bitcoin there, but I would be definitely trading and closing a ton of that trade in and around there, and absolutely building out a massive. I'd be building out the biggest short of my life if that happened. Let's put it that way. Much like I was looking for on gold, right? Gold was something that I was talking about it like last year off of the lows, saying that this is going to pop in a very violent manner. And I'm going to be biding my time and waiting for a massive short position. I also and I got in, I started it here and there in fits and starts. And really, it was when we got over 5K is when I really started to flush that position out. First spike, I took a lower term time frame trade. Next move into over, above $5,000. I took a massive, massive short position on gold. I took a massive short position on silver. I was very public about this and had a lot of people ridiculing me for it because they're like, "You're early, you're going to get blown out." I'm like, "No, I know how to manage my positions. Thank you." But and I basically wrote it back to mean reversion, close those positions, right? Because this needs time to cool down. The parabolic run that we went on off of the 23 and the 24 low side structure was generational. And could we get more violent moves like that in gold? Absolutely, but it needs time to reset and cool down. Same for silver. And when you get a straight move like that, and you start to see weakness on that first big sell off, any kind of retests, I was massively short. And I'll say that, on the weekly for me in terms of volatility setup, this is still a high volatility environment. And I'll be careful about picking my spots, but I'll be a seller if it gets anywhere near over the highs again. I'm going to be looking to exit some of this position that I've taken on the long side, mean reversion, um, and likely looking at lower highs continuing into a consolidation period. It just assets need time to reset and consolidate because you can't find as much liquidity to the upside or downside after giant moves. Yes, exactly. That's exactly what I'm expecting. Um, and it's uh, if we saw something like a V recovery in Bitcoin and we ran the highs, I'm right there with you. I'm taking out the biggest short position of my life against the asset that I love the most. But I don't see it. I don't see that being the most likely scenario as a V recovery. Although if it did happen, I would not be out. I would not be like flabbergasted or really that surprised.
Um, we have three questions from someone from Jay. First one, do you think that the 60K area that was defended is especially strong, like an institutional support level?
Yeah, I mean, it wasn't suspiciously strong. It was logically strong. All right. It's around the high side structure of the previous cycle, right, in the 60K region, with key levels being respected at on lower term timeframes at 65 and 69K respectively. But yeah, I mean, it's prior cycle structure, so it was a natural area to see get hit, just like it will be if it falls through into the 50K region and upper 40K region, right? There's a ton of price action in there. Um, the both bullish trend and bearish trend support and resistance intersections in all of those areas, just like in this area, including from the most recent bull market period. So I wouldn't say that it's suspiciously strong. But you got to remember about institutions and the big money players that are in the game from the traditional market side of things is DATs are primarily buyers, right? But they're small still in the grand scheme of things. You have the most actively traded cohort in traditional markets going to be your ETFs, through the creation and redemption process for those ETFs and the in-kind Bitcoin redemptions and creations that are being done. So they're very active, and then you have that's kind of they are active buyers and sellers, right? DATs are just accumulating until they get pushed out of the market and have to distribute. So they're not really active in the markets, but they are sucking up supply. The biggest cohorts outside of that are going to be your miners, which still hold 1.8 million coins in mining wallets, and they're very active to the tune of hundreds of thousands of Bitcoin being transferred every week. Most people don't pay attention to that, but miners also trade, right? They also send and receive to exchanges. The exchanges are the other big ones, right? Somewhere around 2.4 million coins on exchanges, all being actively leveraged and traded. And then more than 50% of the network is OGs in terms of holdings. So when you look at holders, who really controls this market?
Oh,
It's the
geez.
long-term holders.
Yeah.
It's OGs. Yeah. So um, we need to see for Bitcoin, for things to progress in a more natural way over the longer term in terms of market forces dictating price action. We need to see much larger distribution of the OGs, meaning that cohort that's more than 50% of supply, and that's not including lost coins. Um, we need to see that distribution occur, and it takes a long, long time to occur because we have the institutional players here. What do we see long-term holders doing? Well, they're transitioning to their coins to those institutional players, whether it's on contract through paper contracts that you don't see on chain, or if it's just straight up selling through exchanges or through OTC desks. We need to see more of that, and then we need to see more liquid floating out there in terms of circulating supply. But that's just not how Bitcoin is viewed by the markets. It's viewed as a hodler's asset. It's being pitched as a store of value. Um, so what does that really mean? Is it the institutions that are buoying price? No, it's OGs, it's institutions, it's leveraged markets that are buoying the price in that area, and it's a logical support zone to do so.
There you go. The next question. What are your views on TradFi, like the US indexes and DXY? So I'm gonna let you share your chart here before we let you go.
Okay, so I'm going to primarily focus on not even US indexes because I don't think that they are as important as keeping track of oil and Dixie. So let's go ahead and get the oil chart. And I'm specifically going to be referencing WTI and Brent. Now, this is using CFDs because it's just a cleaner chart. Some people use USO, some people use CL1 for WTI. But in this case, let's go ahead and share this out. All right. So we hit a macro area of interest overhead. Main reason why I'm saying just generally watch oil in the US, because oil in the US is going to translate on upside moves to strength in Dixie, right? And strength in Dixie creates risk off moves. If we see it erodes the bid essentially. So you'll see that risk on might maintain for a little while we have rising oil prices and rising Dixie with it. Not always one for one, but in terms of the correction that I believe is going to be coming, it's going to be on reclaims of this area and consistently trading above 90 to 95 for WTI. Specifically, if you wanted to look at this chart, it's CFDs on WTI, it's US oil as the ticker. And then I'm going to keep track of Brent because it held support where US oil, for fundamental reasons, because the US is the world's largest producer and refiner of sour crude and world's largest producer of sweet crude, um, you know, it lost levels. We're not seeing the same type of effects because of the production volume of the United States that we are seeing in Brent and in Gulf oil. So what I'm watching is the spread. If the spread between the two tighten and continue to go up, we will see continued strength in Dixie. So if we see 90 to 95 reclaimed on WTI and then starts to head towards 98 to 102, I'm looking for just the last little breakout above 107, 105 to 107 over here in this zone. Then to go and test 112 to 115, macro area of interest 115 to 130. Any breakouts above there, or Dixie's going to rip to the upside. Markets are going to rip to the downside. But for the local stuff, I'm watching that as it relates to some of the similar zones of interest. We had Brent hold the 92 to 95 region. If it continues up and starts to head towards the highs here around the 109 to 110 region, we're looking for tests into 115 to 116 at the macro overhead resistance all the way to 150. There's two stacked overhead resistance zones there. As it relates to Dixie, all you got to do is look at oil and then look at Dixie. One of the key things to understand with Dixie is like it gave us the edge last week or the week prior. When it put in a lower high, lower low, well, all we had was a lower high, lows being held by oil. Dixie was telling us that oil was probably going to come down and break down to the lows, which it did. And in WTI's case, break through them on a close. The big thing here is you can take a view of the oil markets and compare it to Dixie, and you can kind of find the edge. Right now, we're bouncing off of a very key area and mean reverting back to the upside. So below $90 for WTI, I think provides for less extreme corrections in equities. Above 90 to 95, especially on closes, I think we see more severe corrections in equities and kind of a blunting of the rally. when looking at something like SPY, which I'm going to use SPY, so just equate it to SPX for thousands.
Can I ask you something here, Landy? Sorry to
Go ahead.
interrupt you.
Go
Can
ahead.
can can we make a ratio between US oil and Brent oil just to watch the spread that you said about between them?
I mean,
So
you
to
can. Yeah.
right?
Yeah. So if you were to look at typically Brent usually trades at a little bit of a premium
Yeah.
um, over US oil, but when you see the spread widen to
Okay.
nearly $9, this is a fractured oil market, which means that there's far more pressure on Asian and European countries than there is on the United States. And this affects the economies very differently. Whereas typically we can look at the global economy as one giant system, regardless of whether you're on the SWIFT system or whether you're not. If you're cut out of any one of those systems, though, it really sucks, right? Like
Right.
Russia, they're cut out of that system. Venezuela, Iran, so on and so forth, cut out of those systems. It's very damaging to a larger degree, but still, even then they have tools to they have resources and ways to get things in and out, obviously, and we know how they do so. But when you look at the fracture in the oil between Brent and US based oil, WTI, the larger that spread gets, the more pressure it is on European and Asian economies, like massive, versus the United States economy, which then leads to a flight of capital from their economies to strength in the US economy. So from an economic standpoint, Scott Bessent has alluded to this in his monetary change speech well ahead of time, by the way. So anybody surprised by anything that's happening, go back to pre-election of Trump and watch Scott Bessent, the Treasury Secretary, and his speeches about global economies and geopolitics. Um, what we're seeing is the world changing right in front of our eyes if this spread stays, right? But if we do start to see it squeeze, and especially if we see the spread normalize within about a dollar to $1.50, maybe $2 per barrel between Brent and WTI, then what we have to then watch is, are they heading to the upside in tandem while getting that normalization, or are they heading to the downside? Because that's going to reflect in the strength of the dollar. So at the end of the day, different markets, same dollar. One of the things that I think is really important right now is because we're seeing flight to safety in bonds and in dollars, right? Dixie, WTI takes the lead on this for strength. If WTI is strong, it's going to give you the indication. Obviously, it's a downtrend right now after a trend break. But if it starts to recover above, 105 to 107, that's a trend break. If it starts to hold 90 to 95 on any retests, we're looking at probably oil moving up pretty significantly, and maybe the market fracturing further, because if US oil's rising, Brent has got some bigger problems going on because the US producers are fine. Onshore oil reserves are, going to get stressed, but there's plenty coming down the Mississippi River here in the United States. We're taking and buying oil from Canada, refining that heavy sour crude. We're getting it from Venezuela, refining that and just selling it right through the Gulf states. Alaska's fine. They're having much less stress at those ports than anything else. So now, the only reason that I say I'm looking past all of this, I'm looking past all of the equities markets and looking right to oil and right to the dollar, because at the end of the day, energy makes the world go round, and that's the only reason that these markets are even here. So, with something like SPY, we're in a consolidation near the highs. This is very, very simply put, an easy read for me. On any corrections, more bullish corrections would be down 90 to 95 and then set higher lows. Anything else outside of that, I'm looking 680 to 685. So if we break down from 690, We are bouncing off the upper first standard deviation. This also would happen to be right around where a trending 5-period exponential moving average is. Just below it is a 9-period exponential. But in this case, upper first, we lose that. Testing 690 to 695, essentially anywhere below there. Mean revert back to the basis 680 to 685. If it is lost, we're going for a gap fill, and that can go down to the 660 region, and it would need to hold, or else it's over. We're likely running and making new lower lows, and this was an anomalous move to the upside, in which I have been building out a little bit of a hedge short position, we'll say. But continuation. If we correct from here or we correct from significantly higher, let's just say we just get a crack and rally and a shoot right up to like 730 or 7,300. It's going to come back down. I think that no matter what, this is going to create a bullish structure. But it's about where does it correct from and where does it correct to? So more bullish corrections coming in above 690 to 695, which would extend the bands out significantly overhead and give the opportunity upon any break above this consolidation to then head 730 to 750 even by the upper third on extremes for the daily. Any loss of the upper first standard deviation and drop of today's low, 700 points or so. That's where I'm looking for a 5 to 10 point discount, and then potential full mean reversion for about a 20 point discount down to 680 to 685. So 6,800 to 6,850. So, and just the equivalent would be one of the things that I don't like is we saw risk rallying. We saw Dow rejecting off of the consolidation high side structure, deviation on an open and close right below, without running its high side structure. So this is telling me that we're due for correction sooner rather than later, and then we just kind of gauge where we find higher lows from there.
Fully covered. Thank you for that, Landy. We have, I think, one last question, and we're gonna end the stream. How do you manage to get through a dark period of trading from a psychological point of view, considering that you followed your strategy, but still your trades are closed with minus, I suppose?
Okay, so when you are following a strategy and you are
in a losing streak,
and you're on a losing streak, sometimes that can just be an anomaly. Take a break. I just take a break. I'll be honest with you. I don't find myself in very many losing positions. Now, that's not me bragging. It's because my system is so refined in terms of when and how I take trades and what those conditions are. And built into my personal system is the ability to build out my trades should things run further than expected. If it's just going against me like consistently, like, because I'll kill trades if I get in the wrong position. I'm just get stopped out, right? Close that position, reevaluate, and move on to the next position. Have a very short memory, and don't allow emotions to get in the way, right? You follow the system, and typically it's not the system or your plan, your trading plan, which you should always have a plan. Before you execute a trade, you need to know every aspect of that plan before you execute it. If you've been doing it a long time, it just becomes routine. But if you are following your plan and you are experiencing a run of losses, just take a break. Take a break. Come back to it. Assess what parts were going wrong about those trades. Like what part what did you miss something in your analysis? Did you not stick to your plan for how you wanted to execute the trade? Did you switch plans while in the trade? And evaluate your psychological point of view. One of the things that I used to do when I was younger and I'd experience like a run of losses, because they happen. It just happens, right? You're set on it's meeting the conditions for you to take a short or a long, and it's just going against you over and over and over. And then finally it turns around, you miss it, and now you're all screwed up and like, crap. I knew it. I was just early or whatever, right? Journal. And I know a lot of people like to use like digital stuff. I physically write down what was going on during those trades, what my thought process was, what the actions were that I took. Um, and I review the conditions that I was trading based on, right? So what were it met these conditions? Why? Let me go look at structure. Did it actually meet those conditions for my checklist to take these trades? Did I stick to my risk profile plan, right, for this particular trade? And that's something where it just takes time. And then if everything was fine and like you followed everything and it's just not work, just take a break. Take a break. Mark's not going anywhere. It's still going to be here when you come back.
Solid. I don't know if I want to I think I have a question. Any altcoins that are on your radar for trading or and accumulating for this bear market, something that you would like to have in your portfolio besides Bitcoin in the next bull run?
No, no, actually. I mean, look, outside of blind going in and accumulating for the potential future from a structural point of view, I'm just trading in terms of accumulation. It's just the normal stuff. Like there's not, your Bitcoins, Ethereum, yada yada, go down the list. Obviously, mainly Bitcoin, but um, during a period like this, obviously, I'm getting in and stacking through trades.
Mhm.
Half of all of my profit on a trade, every single trade. Now, this is just me. This is not obviously financial advice. Half of every trade that I make goes to buying Bitcoin at any price.
Hmm.
It's just part of it's built into my trading plan. I implemented it a couple of years ago. Um, and it's just that's it. It goes in. Half of those gains go into buying Bitcoin at any price. That goes into an account that is in trust and for the future generations. Um, the other half of that I use to trade and accumulate. Right. So the other half of those gains I use to continue to trade and accumulate Ethereum, Solana. I have looked at a few, obviously from the Goxstein side of things, where we're sponsored by Midnight, the network. So I have a lot of
Yep.
Midnight. So I've accumulated some, but that chart is ugly as hell, right? Like it's ugly as hell.
How about
But
hype?
I've accumulated hype. I'm big on hype. But I'm not accumulating anymore. I got it very early. So I got
Okay.
it at very, very low prices. I have no reason to increase my
That's why you don't
profits.
speak about it anymore because it was like one of the top performers during this bear market. And I still think, I think personally that is gonna be I think is gonna be the number one altcoin next season. Okay, okay, from the high caps, I don't see
Oh yeah.
anybody going again. Like they were
Yeah.
so strong against the Bitcoin pair even in this bear market. They were making new all time highs while all the others were just making new lows. Even now, they have a crazy good product. They had a good launch. I love hype a lot.
I like hype a lot. Yeah. So one of the reasons why, if you're asking what my recommendations would be to look at hype. If you're asking what I'm accumulating, I accumulated. So I was very fortunate to be early to hype because of the kind of networks and groups of people that I'm associated with that were
Right.
very into it, and then friends of mine who were developing and launching projects on hype. So I'm invested in hype in multiple ways. So this is where I'm involved in a validator set, a group that's running a validator on hype as well. So yeah, I mean, but in terms of accumulation for my personal portfolio, I'm not doing much. What I'm going to be waiting for is for Bitcoin to show some clear signs of bottoming. And then I'm going to start aggressively accumulating some things when they start to change structure. I'm actually taking a little bit of a different tact than prior cycles because there is so many vectors for for crypto now that are available outside of crypto.
Hmm.
So, um, because anything that is not Bitcoin, I'm trading into dollars, right? So when I take profit, I'm trading into dollars, if that makes
Correct.
sense.
Yes.
Um, so it's about where is it most efficient and where does it have the most liquidity. And right now, there's a lot of different vectors for that trade in traditional markets through options. And we just don't have robust liquidity and options on chain. So,
Fair enough. Landy, we are going into 2 hours right now, and you said this is going to be like 1 hour, 1 hour and a half. I want to thank you for being with us one more time. I want to thank you for the masterclass in Bollinger Bands. Anybody who is going to be fortunate enough to watch this video, I think you're going to have a lot of things to unpack. I love to have Landy in our shows because you hear me talking weekly about these things, and you might get into some kind of like maybe bias on my views and say, okay, Mr. Spread knows all of these things, it's good. But I like to bring people with totally different approaches, which are not biased to the bull side or to the bear side. They just follow price, they follow the framework, they follow the structure, and people with a lot of experience and proven results. So Landy, thank you, brother, for being with us, and really hope to see you on the other side of this bear market. But I hope we're gonna do one more, at least one more AMA during this bear market whenever we're gonna have the chance. Thank you.
definitely, thank you for having me. It's a pleasure. I love talking to you, man. And hey, I wish you all great fortune, and you've got nobody better than Mr. Spread right here in front of you to help you guide you and teach you how things work in this market, brother. I look up to you, so I think you do a great job.
Thank you very much. I'm blushing now because, coming from someone like you with your experience and with your knowledge in the markets, plus from the TradFi markets, means a lot. Thank you for being here with us. Thank you, shifters, for being also in the audience and for the great questions. See you on the chat, see you on the charts. Don't forget to vote for your top favorite altcoins. By the way, I have a special announcement for the people who are here and didn't do it until now. You should definitely do this. One more second, brother. This is extremely important. um go follow Landy, guys. It's extremely important. This is where he is. He's a partner at Gochstein. He has these amazing videos weekly and a few times per week where he breaks down all the things that you just watched this evening, but in way deep, like bigger, like in way more in depth. You can see like half an hour videos. You're never gonna miss it. Go follow this guy. He's the real deal. You know that I don't take and I don't talk lightly, and I don't give compliments so easily, but he really deserves it. Thank you, brother. I'm gonna shake your hand for this. Thank you, shifter. See you next time. Bye.
Thank you.